Original.
And I'm in love with the money.
Hey everyone, we're back. I have with me Cherryl Small, and we are going to talk about reverse mortgages and how it can help you to fund your retirement. Cheryl, I'll allow you to introduce yourself.
Hi, everyone. Thanks, Cardine, for having me on today. I'm Cherryl Small. I am with Wellbanks Mortgage Group. Physically, that is located in the beaches, but I am in Mississauga and the surrounding areas, and I fund mortgages throughout all of Ontario and all of Canada. And I am mainly focused strongly in reverse mortgages. I'm also in the alternative space. And I am a strong advocate for women in finances. So I do a lot of work with women who've had setbacks in their life.
Okay, thank you, Cheryl. And the reason why I'm so glad to be having this conversation is because I came across some stats a while back that said that 50% of persons between the age of 55 and 64 that have not yet retired have less than $5,000 saved towards their retirement. 75% have less than 100K. And we all know that nobody can retire on that, right? That saving. So we have to look at alternatives. So, because the alternatives for them is to continue to work well into their 70s, potentially, if they don't have this option that you're going to share with us today.
Yes,
absolutely.
Yeah.
So Cheryl, tell us, what is a reverse mortgage?
So a reverse mortgage is essentially a loan. It's a loan that is backed against the equity that you have in your home. So it's not a conventional mortgage as you may know it. And a reverse mortgage, so a loan, so you're paying that loan payment, that interest payment is then added back into the total that you have your existing mortgage. So it's essentially increasing each year as the interest is added back in.
Okay. So do you have to pay back a reverse mortgage during your lifetime?
Absolutely not. That's the beauty of the program. The reverse mortgage is one where you are given a lump sum of money, but you do not have to make a monthly mortgage payment. So that allows you to just have more access to cash if you don't have that, right? So that's the beauty of the reverse mortgage. No monthly payments.
Okay. So if you're in a situation where you're house rich but cash poor, this might be an opportunity to get some cash out of your home, right?
Absolutely. It's one of the ways. It's a viable option that I think a lot of people aren't really thinking about. But if you open your mind and you explore all the options, this is one of the great options.
And who would this be for? Which client do you think would this suit? What are the requirements?
So the requirements are, in order for you to qualify for a reverse mortgage, we are going to look at your age. We're going to look at your property. We're going to look at its location. We're going to look at the value of the property. So that's essentially what we're looking at. So the older you are, the more money you would qualify for. And we will give you up to 55% loan to value if you qualify for that. So the younger you are, you may not get 55%, but that is the cap that in Canada we would allow you to go up to with that mortgage if you qualify.
So what's the age? You said if you're younger.
Right. So 55 is that number. So from 55 years plus is what a reverse mortgage is covering you in that time of your life, in that age group.
Okay. Yeah. You didn't say credit score. Does that impact whether or not you qualify for a reverse mortgage?
I'm going to say yes and no. Of course, the bank that is giving you the reverse mortgage will sort of take a look at your credit score, but it is not dependent on your credit score. So we don't have to worry so much about it. But actually, They want to take a look and see the client that they're funding this mortgage. After all, they are a bank, so they're going to look at a number of things. But it is not. It's not dependent on your score. Absolutely not.
Especially since there's no requirement to pay it back during your lifetime, right? So I can understand why it's not a significant criteria for evaluating.
It's not a significant criteria, Cardine, but when the bank is giving you this money, they're cautious as well too. We don't want to have a case where we're giving you a reverse mortgage and we're essentially uh, eating away at the equity of your home, and you really shouldn't have been in that. So we're looking at everything. The bank still wants to make a sound decision, making sure
Mm-hmm.
that they're giving someone who qualifies properly and who can sustain that, because we're adding back the interest into that. So we want to make sure that you can sustain that and your money is going to last. We don't want you to lose your home. We don't want you to use up all your money. It has to sustain you to retirement. And we don't know, people are living longer these days. We
Yeah.
don't know how long you're going to live till. So you've got to be able to manage that money.
Manage.
So, we want to make sure that you're good with credit, you're good with the money. We're not going to give you this large sum of money and you're going to squander it. So,
Yeah.
we're careful. We're careful in that sense too.
Okay. So they definitely don't want you to take it and go work the slot machines, right?
Absolutely not. I mean, we're asking you as well too. I mean, we're going through certain questions like, what are you going to do with the money? If you're paying out a conventional mortgage, we take care of paying that out, and then we will give you the difference that's left
Mhm.
after that. And you can essentially do what you want with that money. Um, and I'm sure you're going to ask me this question, but I guess I can segue to it now. I mean, you are going to be able to do whatever you wish with that money once we've paid off any existing mortgage. You can leave that in a legacy for your family. You can do renovations to your home. Some people have money in an investment fund. They don't want to break that. So they will use money from a reverse mortgage to do things like travel, or maybe their health is declining and they
Mm,
want to age in place. They don't want to move from their house. So they're going to bring in the care and the help that they need. They're going to retrofit the house to suit as they're aging. So there's many reasons people might decide that they want to take a reverse mortgage. And the important thing is that money that you're getting is tax free and it is not affecting your CPP or old age pension. So there's no
okay.
worry about it affecting and decreasing that.
Okay. So just to recap, no impact on your government benefits, no reporting on your tax returns annually. So that's a plus,
Right.
definitely. And you said you can do anything with the money, but what are some of
Yeah.
the better options for using that money to ensure that it actually sustains you for the 20, 30 years that you might have for retirement?
So because you're only allowed to have certain amount at once, so once we give you that money, as I said, if that's free and clear for you, you are going to be able to use that money for whatever you want. And I'll be honest with you, a lot of people that take that money, they are in need. They don't have the cash that they need. They don't have that disposable cash monthly that they need. They don't have a really great pension. They don't have a company pension. They don't have a lot of money saved. Tying back to the stats that you gave just a little while ago, we can see that not everyone is prepared at the time of retirement. And I think it's a fallacy that people think that, okay, you've reached to 65, 70, and they think you've got all this money. And it's not the case for everybody. So some people just need that money, Cardine, just to live, just to
Yeah.
survive. If you have any major illness and you don't have a way to go out there and work or to get any extra money, this money comes into play as a lifesaver to just help you with your day-to-day expenses, right? So, and of course, you've got people who um, will give the money to their loved ones now. You want to give money to your kids. It's great to help some people buy a home right now. Like, let's say you've got young kids who are, no, young. I shouldn't say young. You've got adult kids who are wanting to get into the home market now. We know how tough it is. So by you taking some money out and giving it to them now, as opposed to when you have passed on, it definitely is a help in that way. And some people use this money to buy a secondary home, a cottage, or an investment property. That's another thing that some people do with this money as well. And like I said, increasing health expenses as we're aging. Some people are
Yeah.
using money for that as well. So different things. There's no one size fits all. Different things. Different people are using it for different reasons. Absolutely.
Okay. Yeah, I can definitely understand that, especially in light of the stats. And as it is now, we have to be concerned, given those numbers, about the sandwich generation who might be taking care of adult parents as well as younger kids. The financial burden on them could be relieved by accessing equity within their parents' home to help them with that lifestyle that they're wanting to maintain, taking care of them, whether it be their health concerns or just making sure that their living expenses are covered, as you said.
Absolutely. I
Because when
agree.
you
I
yeah,
do. And just to add to that, that you mentioned the sandwich generation, I know that a lot of the parents, it's twofold. The parents are worried about leaving money for their kids. So they don't want to tap into that money, but there's more than enough to let them enjoy their life, use some of the money that they earned, take care of themselves, but that also relieves the pressure on their adult kids who,
yeah.
as you said, they're a part of that sandwich generation. They're still taking care of their kids. They're taking care of their parents now. And so the burden becomes so astronomical on them to carry all of those expenses. So definitely it is a way to use the parents' money. After all, it is their own money. So, why not use some of it? And there's still more than enough left for the kids after.
Okay. So because it's capped at 55% of the loan to value, even so, they're not making any monthly payments against the principal or the interest. The interest is capitalized. So how is
Yes.
this typically settled at the point that they
So
pass?
right. So when someone decides that, hey, I don't think I want a reverse mortgage anymore, you have a number of options.
Mhm.
Sometimes people are moving to a nursing home. Sometimes they just decide they want to sell the home. It could be that they have passed away, or it could be that a family member wants to keep the house in the family, and so they are given a period of usually about 6 months, but it can be a little bit longer to find a conventional mortgage to pay out the reverse mortgage, and then they can keep the home. So in all those, whether the person dies, whether they move to a retirement home, whether they decide they're just going to sell the home, the reverse mortgage has to be paid out in full, and
Mhm.
um, then that's it. So if it is that a family member is going to get a conventional mortgage to purchase to pay that out, then the home would still remain in the family.
Well, you mentioned two ways to close out a reverse mortgage: selling the property and settling the debt, getting a new mortgage to roll it over into. But my favorite option is paying it off using the proceeds of life insurance if it's an instance that it's on the passing of that owner, right? And I think
Absolutely.
this is something that people should consider at the point of getting a reverse mortgage, but also even better, well, decades before, right? Because it's always
Yes,
good to ensure that you have life insurance so
absolutely.
you can take care of any debt that you can have at passing, the tax bill that you have at passing, and also, again, it's a wealth creation tool. So imagine
Yes,
if somebody at the point of retirement, they do have equity in their home, but they don't have the cash flow, right? But they do have a life insurance policy. At least they can go into that situation with the comfort of knowing that even so, they'd be able to leave the home to their loved ones because the proceeds of a life insurance policy would
would
pay
cover.
out that loan.
Absolutely. I will say that whether it's a reverse mortgage or whether it's a conventional mortgage that I put my client into, I always, always, always suggest that they have life insurance. We do not know what tomorrow holds, and you should always have life insurance to protect yourself, protect your family. And that is something that I know lots of people are a little hesitant with the insurance, but I will tell you, Cardine, time and time again, I have had clients who situations have come up, and either they have not had the life insurance, they decided they didn't want to go with the life insurance, but definitely it is something that everyone needs. And even if you have a reverse mortgage, the life insurance is still excellent to have. And I recommend it because when that person passes on, or when if someone is ill or something happens, that life insurance is that money that covers, or that life insurance could be used to pay out the reverse mortgage as well, depending on the situation, right? So
Yeah.
always looking at your life insurance and that legacy, looking at wills, looking at all of that. This is something that's all a part and parcel of that financial health that needs to
Mhm.
be addressed.
And the other thing too, a life insurance policy, Cheryl, can actually act similar to a reverse mortgage, especially if you take a permanent life insurance policy that allows you to build up cash value, because you
Mhm.
are building an asset that you can later leverage during your retirement to access cash. Similar to a reverse mortgage, you're accessing cash, leveraging the asset that you've created. That too doesn't trigger any ways that you can access it, don't trigger taxation because it's loans proceeds similar to a mortgage, and it doesn't impact your government benefits. So again, for anybody in a situation where, if you're at the point you're between 55 and 64 and you're looking at retirement and you find that you're house rich but cash poor, a
Yeah.
reverse mortgage is one option that you can definitely look into. And
Yeah.
if you're at the point where you're 20, 30 years out from retirement, create wealth inside of your life insurance policy, get protected. So whatever happens 10, 20 years down the line, you have that safety net in place for your family.
Absolutely. I think it's about choices, Cardine. And I think that uh, knowledge is power. And if you just expand your mind and just sort of look at all the options, it's about options. And
Mm,
this, I want to also say that a reverse mortgage is an option. It's a viable option. And it really, as you say, if you're house rich and cash poor and you just don't have the resources for your retirement, it's definitely an option to look into, because we don't all have that big safety net at the end that you would like to have.
mhm,
And as much as a reverse mortgage is a great option, I'm not saying it's for everyone, because
mhm,
not everyone is in the same situation, and not everyone needs the cash influx, right? So
mhm,
if it is that you don't need this product, then it's not for you. I'm not saying blanket statement it's for everybody.
mhm,
However, it is a viable option and a really good option that is available for those who have the extra equity in their home. And
mhm.
you may be struggling, or you may be a part of that sandwich generation and thinking how you can help your parents. The reverse mortgage is definitely a good, viable option to look into.
Yeah, and even if you're not stuck in a financial situation, but you want to use that equity, leverage it to generate more income, you can use that too. You can pull out the equity,
Absolutely.
as you said, buy a secondary property, rent that out, and that's cash flow to you, right? Or
Absolutely. And
invest,
I have people who've done that.
yeah, invest it in maybe a segregated funds that also creates a return on that investment, because having it in the home, right? It's not really working for you until you start to use it. So
Yeah.
again, Cheryl, thank you so much for sharing this with our listeners. How can they get in touch with you if they want to learn more?
The best way is you can call me directly at 416-578-4187. I think that's the best way. You can text me as well. I would be happy to answer all your questions. Again, you're just looking into if this is a viable option for you. I can tell you easily and quite quickly whether this is something that would work for you or not. And you can start the conversation there.
Yeah, and if you want to look into life insurance, making it work for you and getting it out of the way, get it when you're young, reach out to me at 647-951-6905. You can post comments after this video and we'll get back to you as well. And you know what? Put money to work for you, put a safety net in place for your family, and take care of your retirement. Thanks for listening.